If you're starting to think about buying a home in the next 6, 12, or even 18 months, I'm going to go over some things that you can start doing and thinking about right now to make sure that you're able to buy that home when you're ready. Buying a home takes a lot of preparation and planning. Some of these things won't happen overnight, so get a jump on it now and you can make sure you're ready to move forward when the time comes. And you'll want to stick around to the end because I'm going to list 4 things you should absolutely not do before you buy and close on your house, or you'll risk putting your home buying dreams in jeopardy. If you found my channel and you're looking for everything you need to know about buying or selling a home and living in the Durham region, you have found the right place. It would be amazing if you would like and subscribe to stay up to date on all of my newest videos. And if we haven't met yet, my name is Vilija Truelove. I'm a local Durham Region real estate agent, and I love hearing from people just like you. If you're moving to or within the Durham region, whether you're ready to move now or 6 months from now, set up an appointment, which you can do through my calendar link in the description below, and I can answer any questions you have and we can get the process started. So, number 1, you need to do your homework. It's very important to become educated about buying a home, especially if you're a first-time buyer. You want to truly understand what it takes to buy and own a home before you start seriously looking. This step involves a few different parts. First, you'll want to learn about your mortgage options. Do you understand how mortgage rates work, such as the difference between fixed or variable rates? Do you know what amortization is? Learning about these things before you buy a home will mean that you aren't left scrambling afterwards. You can also put your financial information into an online calculator, and that will show you approximately how much of a mortgage you should qualify for, which is based on your income, down payment, and current interest rates, as well as how much that will cost you monthly. As a side note, this is absolutely not the same thing as getting a full mortgage pre-approval from the bank, but it does start to give you an idea of what you should qualify for. Next, start exploring neighborhoods. You want to check out neighborhoods in terms of price points and features of homes, as well as what the neighborhood offers in terms of amenities, schools, proximity to highways, and really anything else that's important to you. I've made many Durham area videos that tour different neighborhoods in the Durham region, which should help a lot with your initial research if you want to watch some of those next. You can also look at homes online on sites like realtor.ca, or reach out to a real estate agent like me and ask me to set you up on an email search so that you can receive new listings by email without having to look yourself. This will help you explore your wants and your needs and get a better feel for what's really important to you, such as location, whether you really want a large kitchen or a backyard. With condos, you'll also get an idea of monthly maintenance fees and amenities in different buildings. It will also help to give you a bit of a reality check. If the online calculator tells you that you'll likely qualify for, say, a $750,000 purchase price, it's good to see what that price will get you and know that maybe you'll have to start with a townhouse, for example, or buy in a different city than you originally planned to be able to get into the market and then work your way up to that next dream home. Another thing that you can do early in the game is have a consultation with your real estate agent. I like to meet with all of my buyers for a consultation to go over everything that buying a home entails. We go over what to look for at showings, the offer process, what money you need to give and when, what your closing costs will be, and what happens right up until you get your keys. I answer every question you have about buying a home. Buying a house isn't something most people do more than a few times in their life, and there's a lot to know. So don't be shy and ask lots of questions. If you think you'll be buying within the next year or so, you can set up an appointment through my calendar and we can get this process started. The next important thing to do is get your finances in order. Buying a home is probably the biggest expense you will ever have in your life. You want to be a responsible buyer and homeowner, so now's the time to focus on your finances, to put yourself in the best position that you can be in. When you apply for a mortgage, they will be checking your credit history. To avoid any surprises, check your credit yourself, which you can do on Equifax. Checking it yourself does not affect your score negatively. Look for any issues or discrepancies and see what your score is. If it's low, you can focus on strengthening your credit score and building some credit history. The higher your score, the better of a candidate you are for a mortgage. And if you're a couple, then both of you will need to work on your credit. It can take 6 months, or in some cases, even longer to improve your score, depending on where you're starting from. So you'll want to start today if that's an issue for you. Pay your bills on time. Even if it's only the minimum payment, just don't make it late. And don't take on any large debt. If you have a lot of debt, the bank will also take that into consideration and lower the mortgage amount you qualify for based on that. So if you can, make yourself a plan to pay as much of your debt off as you're able to before you apply for a mortgage. You also want to know what monthly mortgage payment you can afford. What a lender says you can afford can be very different than what you're actually willing to spend each month. No one wants to be stretched too much and become completely house poor. So I always suggest to buyers to make a very detailed budget. Put everything down, including car expenses, groceries, basically everything that you spend monthly. And what you have left is ideally what your monthly housing costs will be. From there, you work backwards to see what that monthly mortgage payment means in terms of purchase price. But don't forget that it's not just your mortgage. You'll have utilities, insurance, property taxes, and maintenance costs as well. If that monthly number doesn't get you the mortgage amount that you want, it's time to look at the budget and see if anything can be cut out to increase that number. The other thing you have to do is save for a down payment and your closing costs. You will need a minimum of 5% down for up to a $500,000 purchase, and then 10% for the amount between $500,000 and $999. A purchase of $1 million or more requires a minimum of 20% down for the total amount. As a first-time buyer, you may also be able to use money you have in RSPs to help with your down payment. Reach out if you'd like more info about that. So as you can see, there's a lot to get in order. So even if you're not planning to buy your home for a while, you can start to prepare now. Now, there are also some things you'll want to avoid doing before you close on your new home. These things could potentially derail your ability to get a mortgage. Number one, do not change jobs or become self-employed, or obviously quit your job. Of course, if you're moving up to a better job, then fantastic. Just know that a lender will want to see that you're not in a probationary period and possibly want to see that you've been there for at least a few months. If you become self-employed, you will need to show 2 years of income history. Number two, do not buy a vehicle with a loan. Adding a car payment to your monthly expenses will drastically lower the mortgage amount that you'll qualify for. Also, try not to use credit cards excessively or let your accounts fall behind for the same reason. Number three, don't allow any unnecessary inquiries into your credit. Allowing a mortgage broker to verify your credit if you're at that point in the process is an absolutely necessary step. But don't allow several different companies to check your credit, as this can start to impact your score. And number four, do not co-sign a loan for anyone. You may think you're just being nice and helping somebody out, but this becomes looked at as your debt. And again, will affect the loan amount that you qualify for. So as you can see, start planning now if you want to buy a home over the next year. You'll be a more informed buyer and borrower, and will be ready to purchase a new home with more confidence and hopefully a little bit less stress. And know that I can help cut the learning curve for you. We can schedule a time to meet, and I can walk you through the process and the steps involved well before you're ready to move, so that you know exactly what you need to do when the time is right for you. Don't forget to subscribe for more videos like this. Thanks so much for watching.